Hello guys, I go by the name of Ahmad aka Ammarullah, as you all know me. In this video, I'm going to show you exactly how to take trades like this. I'll delete everything and start afresh. So if this is something you'll be interested in learning how to do, you should watch this video from the beginning to the end and make sure you like this video and subscribe to my YouTube channel, right? So let me delete everything and start afresh from the beginning. I'll make this video a very quick one. It should not take a lot of times. So let's start from the weekly time frame. Top-down analysis. From the drawing I just deleted, from the one I just deleted, if you can see, all the trades are sell. They are all selling. They are all bearish, like, right? They are all short entry. So if you can clearly see on weekly time frame, we are in series of downtrend, if you can see. So that's the only thing we need in the weekly to see the direction of the market. The structure, what is it? Is it uptrend or downtrend? So you can clearly see it's downtrend. So let's go to daily. Weekly is showing us downtrend. Daily too is downtrend. It's following daily. So that's all we need to see in these higher time frames. I normally use 1 hour time frame to take trades, but the higher time frames are used to see the structure of the market, the overall structure. So you can see even 4 hour time frame is clearly bearish downtrend. So if you can see from here, so where we are trading, it's not all those up there. We are trading only from this place, from this place to this place. So that is where we are trading, right? This is our low, the lowest low, which will be our main target, our target of everything. Since we are in downtrend, we will not be looking for any reason to sweep a high, but we will be looking for reasons to sweep lows. Anything we are taking, any trade we are taking now, we will be taking trades that will reach this particular low, because that's our target, right? So the reasons of those particular trade was, after this low that was being formed, the market started rallying up and reached this particular zone. Why did I select this particular zone? Because there is an order block right there. This is the order block. This is the starting of all the cells that I just posted, right? So let's go to the lower time frame and refine the order block and get our entries on 1 hour time frame. So if you can see, this is the order block, this particular candles that are here. The last bullish candles, right? The last bullish candles, the ones at the top, they are our order block. So that is where we started to look for our entry. If you can see, from down here to up here, the market is showing like it's an uptrend, because this is lower time frame. But in the higher time frame overall, the trend of the market is downtrend, is bearish. So we will not be trading. We are not trading uptrend in here. It is only temporary uptrend, so that it will reach a level of higher time frame, which is this particular order block that we found in our 4 hour time frame, right? So after that, after the market tapped that, it rejected from it. If you can see, it rejected. This rejection lead to this break of structure. This is the first break of structure that we have. So seeing that after every break of structure, there must be a pullback, a retracement. After every break of structure, there must be a retracement. Every break of structure, the first rejection, the first pullback is based on my trading my trading strategy. The first pullback is what we call inducement level. After every break, there must be 2 pullbacks before a structure will confirm itself, before the market will start going the way it should go, right, at the direction of the higher time frame, or the direction that it's supposed to go. So after this break, This first pullback is now the inducement level. Then after the inducement level, at the top of the inducement level, you that is where you find your entry level, right? So what do we have here? We have this particular order block, this last candle that tapped this place, the tallest one. That's your order block. That is where the first entry should be at the order block. The order block, then sell from there. This is how I got the first sell. Then the target will be these lows. All these lows are target. This is the first target, second target, and this is the final target. So this is how I got the first entry. After tapping higher time frame order block, the market rejected and break structure. First reversal, first retracement is an inducement level. Then the market came back and sweep the inducement level and tap order block of lower time frame. Order block of lower time frame is the candle that tap the higher time frames order block, right? So this is our first entry. Then the next one will be that particular break. We have first break. After, as this move is going on, then the market break another structure right here, if you can see. So that particular breaking of structure, there is first reversal, first retracement after the break is considered an inducement, just like I told you of the first one. It's an inducement level. Then the market swipe down to that take profit. Whenever the market is coming back to this particular level, the moment it take out this particular inducement level, anything above of it, you will find a PDRA at the top of it, not PDRA, any point of interest or something, other block. Then now we have an other block up above ahead of it. This particular candle, other block must not be a last bullish or bearish candle. Other blocks, there are other blocks that are in a particular move, so in a single move, right? Just like this one now. This green candle now is the next other block, right? So that was how the second entry was being made after the market reversed and take out this particular first retracement after this break, right? It take it out, then tap this other block that is right here. So stop loss ahead above the other block, and target, the next target will be this particular low now, since this is the new low we have. That's the next target. Then if you can see, the market came and hit it, boom. That's two. Then the next one, the next entry, the third entry, I posted 3, if you can remember. I just posted 3 entries, right? So the next entry, after the market tapped this place, it rejected. Then this is the break we have. One break, changes to, then it sold down again. It reversed back. If you can see, I did not take this one. Then after this break, the market reversed. First retracement is an inducement, as I told you. First inducement, then the market went back and tapped this and take out the inducement level. Then let me remove this first. Now it's more clearer. Break. After it break this, then it reverse. First retracement is an inducement. After the inducement, it do the second retracement and tap on this last candle. When it tapped on this candle, it sold down, but I did not mark that entry, right? I did not mark it. It was not like in the picture that I just show you before starting everything. So now this particular level, this candle that tapped this place is our next, that was my next entry, where my next entry is at, right? This candle is my next order block. from here to here. Now it is not last all last bullish. It's the same last bullish candle, but if you can see now we have two bullish candles. So we will not consider only this one as our other block. We consider the both of them. If there are three, that's how you do it. You consider them all, right? If you go to any time frame ahead of this, you see a single candle, like 2 hours time frame. If I'm to go to 2 hour time frame, this and this will be a single candle. So that is the reason why I will consider them as the next order block. So after the market reached the full take profit, if you can see right here, when the market hit take profit, then it reversed back. All right, it reversed back straight to that next order block, and reverse to the next order block and sell down to this next draw or liquidity. But if you can see, we are still yet to reach that our target, right? That low that has been our target from the starting of the video, right? So that will be our next, that will be where we will be targeting, and we still have another room to go to, right? The market may decide to just go down to the low. As we are now, it is yet to reach there, so it may just decide to do that. But what we expect now, since the market is less volatile now, is for the market to reverse back to this particular candle. Why am I choosing this? Because that is the last candle, that's the last tallest candle after during this move, right? That's the from, if you can see from here now, from this place to this place, everything is now balanced because of what? Because of this particular candle. After this drastical move, right? After this move, the market did first reversal, which is an inducement. Clearly, as I tell you, this is the inducement. Then after creating the inducement, the market came back, and this candle, this particular candle, is the candle that take out the inducement. So that is our next point of interest. That makes it our next point of interest. If the market is to sell back, like to buy back, if the market is to reverse back, that will be our next point of interest. Then stop loss will be ahead of it, and target will be our next point of liquidity, draw or liquidity, sorry. So that was how I found the 3 entries and how I got the next entry to come, which is this particular one. So this is what I am expecting on to see. I am expecting this low to be out, then the market reverse back, then tap order block again, do like this, create another inducement, then tap this and sell down. This is what I'm expecting next to happen on gold. So thanks for watching. That's it. Hope you learned something today. Thanks. Bye.